Hello, everyone. Welcome to today's webinar. It is the overview of significant changes to the campaign finance law. So thank you for participating. And I wanted to let you know just a couple housekeeping items. So we do have the ability to take questions. So you can go ahead and type your questions in, and I will periodically kind of check those and try my best to answer them. If for some reason I can't get to your questions by the end of the webinar, then please email me, and then I'll be happy to go ahead and get back to you as soon as possible. So we'll go ahead and get started. So essentially what we're going to be reviewing today is the overview of some legislation that's occurred not only in the past couple years, but also this past legislative session. And so the first is going to be Senate Bill 1516, and this was essentially the major overhaul in campaign finance back in 2016, and then it had two trailer bills that followed. And so I think all of you are probably familiar with a lot of the content of these laws because we've done several trainings throughout the past year and a half. But what we found is really most of our cities and towns are actually just having their first election with this new law this August and November. And so that's why we thought it'd be a good idea to do this refresher course. So we'll be touching on some basics with that law. And then we'll also be doing just touching a little bit on financial disclosure. And then the last two here are the local candidate committee registration and then the PAC registration. We've had some adjustments to those laws actually this past legislative session, and those will both be effective on August 3rd of this year. So we'll talk a little bit about those. So first off, let's talk about, this is our overview of what we're going to talk about. We'll briefly touch on what's in a candidate packet, just because I know all of you are in the midst of candidate filing. Also, candidate committee registration, PAC registration, contribution limits, and then campaign finance reporting is really going to be the bulk of what we talk about. We'll also mention committee termination and then some enforcement. So just to talk about what's in a candidate packet, I'm not going to go through all of the processes of the actual candidate filing, but I at least wanted everybody to have an update about the forms that are in the candidate packet. So the first are the nomination petitions, and those should be dated July of 2012. Those have not changed. So those are the same forms for the past 6 years. I think everyone's pretty familiar with those. The other one is the nonpartisan nomination paper, and that was dated April of 2017. And the only reason why I wanted to mention this one is sometimes I get questions about where the declaration of qualification is and where is the statement on campaign finance law. And both of those are actually contained in the nomination paper. So you can kind of see that if you pull the nomination paper from our league manual, you can actually see a copy of it and see that there's a declaration there as well as the campaign finance statement. And that statement has changed in the past couple years, so it's a little bit smaller than what it used to say, and it really just has to do about having, you don't have any outstanding judgments of $1,000 or more. And then the other part of that that's important is to know that there is no longer, you don't have to have that form notarized. So it's going to be just essentially they can sign it. It's just a declaration now on the nomination paper. I have a quick question about if this PowerPoint will be available afterwards, and yes, it should be. If not, what I'll do is make sure that everyone who's attending, I'll go ahead and make sure that you get a copy of it. So the next one, the nomination paper for write-in candidate, again, that's the same form really as the nomination paper itself. And then the financial disclosure statement, that's dated October of 2017. We received that from the Secretary's office. If you recall, they made some changes that now it has to be available in an electronic format as prescribed by the Secretary's office. So that has been a change for us. We haven't been able to use what we previously were using was our local form. This is more of a kind of state-centric form, and I think it's kind of an interim procedure until the Secretary's office eventually would like to be able to have their system, their financial disclosure system, be available for our candidates as well, which is an online system. So this, I think that's kind of where they're going. But for right now, we have to use that form that's dated October 2017. You can post that on your city or town website. It's not required, but many jurisdictions do, and I do think that there's often a lot of public records requests for it, so you want to try to at least make that available. The next form is the political committee statement of organization, and we'll talk a little bit more about this as we kind of get more into the campaign finance. And then I've kind of highlighted the next three forms, which again, we're also going to be talking about: the campaign finance report forms, the termination statements, and then also talking a little bit about the Secretary of State's handbook. Okay, so let's just jump in. And so first is the candidate committee registration. So the statement of organization is, here we go, is to, obviously necessary if you're forming a committee. Now, it's really important to know that it's only required if the candidate spends or receives in any combination $1,100 in connection with their candidacy. So the thing that I want to highlight here for candidate committee registration is that it's not automatic any longer, that when you come in to file your nomination paperwork that you have to file your committee registration. It's only triggered if they meet that threshold requirement. So we have an example here. If a candidate receives, let's say $600, they've gotten $600 in contributions, and then they spend $501 of that. Well, that total is over $1,100. And so they are required to register as a committee. And I know sometimes that doesn't make sense because you're essentially using $501 from that same pot of money, $600, but that's essentially how it's written in the statute, that it's any combination of contribution or expenditures, that when you combine those, whatever that total is, if it's over the threshold amount, then that's when you trigger the requirement to register. But the important thing to know is that House Bill 2078, just a couple months ago, and as of August 3rd, which is the effective date of that legislation, our threshold requirement for city and town candidates is going to go back to what it was before. So it's going to drop from 1,100 and it's going to go down to 500. So that's why I sent that memo out. I sent a revised memo last week to all the clerks, letting you know the effective date, and that memo is really kind of ready to go if you want to hand that out to your candidates, so that they understand around August 3rd that maybe they're not having to register right now because they're not reaching the $1,100 threshold, but on August 3rd, maybe they'll be over the 500 and they'll need to register. So just wanted to make sure that everybody's aware of that. It's also important to know that House Bill 2078 is only about candidate committee registration. It does not affect political committees. They still have a threshold of $1,100. So when your candidates are coming in for filing, they're going to submit their financial disclosure statement, their nomination paper, which again includes that declaration of qualification and their campaign finance statement, and then their nomination petitions. The statement of organization, as I mentioned before, is not required unless they've reached that threshold amount. So that's the trigger, not necessarily coming in to file their nomination paperwork. Also, as a reminder, there is no threshold exemption statement. And I know this has been really kind of a change for everybody, but this was repealed in 2016. And so when we have a candidate that's receiving or spending less than at least $1,100 right now, but later August 3rd, it's going to be that $500 level. If they're going to be spending less than the threshold, they do not have to register. So that means they don't have to sign any statement form. They don't have to report. Now, we do have some candidates who are just accustomed to registering and they want to register kind of in an effort to be transparent, or maybe they think they're going to reach a threshold and they don't want to worry about it later, so they just want to register now as a committee, and that's perfectly fine for them to do that. Just once they actually file that statement of organization, they are required to file their campaign finance reports. Now, if a candidate does reach that threshold amount at a certain point, they have 10 days to register as a committee. So that was for candidates, and this is for the political committees. So any entity has to register as a committee if they spend $1,100 during a calendar year and its primary purpose is influencing elections. And just as a reminder, this threshold of $1,100 goes up every other year. So as of January 1, 2019, it'll actually go up to $1,200. Now, primary purpose is a little bit, it's defined. It just means the entity's predominant purpose. And essentially, you know, for your purposes, this would really be triggered if someone came and filed a complaint and is maybe alleging that a committee or an entity should have registered and they haven't. And so you can kind of look at the statute and see that an entity is not organized for the primary purpose of influencing an election if essentially they meet all of these factors. And I highlighted the one that has to do with the Arizona Corporation Commission, because House Bill 2153, which again will be effective August 3rd, actually repeals this factor. So there's only going to be 4 that you have to look at, or that an entity has to consider when they're determining if their primary purpose is influencing an election. You just won't have to worry at all about the factor involving the Corporation Commission. And kind of along with this is when you, as the filing officer, makes a rebuttable presumption that maybe an entity is organized for a primary purpose and you believe that they should be registering. So 2153, again, removed 2 of the factors that involve the Corporation Commission. So you cannot look anymore. Again, this is after August 3rd when it's effective, but you will no longer have to look at whether or not they're registered with the CorpCom or whether or not they were in good standing. So those factors will be gone from the political committee kind of primary purpose test. House Bill 2153, essentially what it does, it prohibits any clerk or a city or town attorney or a public officer from requiring an entity that's a 501A to essentially have to register or to report or disclose any type of donor information or disclose any tax form or have to submit to an audit or a subpoena. The only exception to this is if they do meet the committee requirements. So they're hitting that $1,100 threshold and their primary purpose is influencing elections. So for most of the general law cities, this really is not going to make a difference. It pretty much is re-emphasizing what the law already said. But if you are a charter city, specifically Tempe, because you just passed some disclosure requirements, also Phoenix is considering some disclosure requirements as well, you're going to want to talk with your city attorney for guidance to see how this new law is going to impact with your city charter. This is a little quiz, just to kind of remind everybody of what we've kind of covered so far. So kind of ask yourself, is a statement of organization required if essentially a candidate receives $300 and then spends $250 in connection with his candidacy for council? Well, so for right now, the answer is no, correct? Because the threshold is $1,100, and so they would not have to register as a committee. So what about after the effective date of House Bill 2078? Does the same candidate have to register? And the answer here would be yes, right? Because the 300 maybe they've received and they've spent 250, that would be 550, it would be over the $500 threshold. And so they would have 10 days from the August 3rd effective date to come in and actually register as a committee. So what if you have a political action committee and they receive and spend $1,500? Would they have to file a statement of organization? And this answer is really, it depends, because you have to then look at what is their primary purpose. If you go through those factors and you find that they're influencing an election, that's their primary purpose, and they're over the threshold amount, then yes, they would have to file a statement of organization. But it all depends on that primary purpose. Let's say you have a political action committee and they spend $750 and their primary purpose is influencing an election. So you definitely know they want to influence the election, but they are under the threshold amount. So in this situation, no, they would not have to register. Now, of course, they still need to track all of their spending and their receipts, because if they do reach that threshold, they would have to register. Okay. So just let's review the committee registration piece. So there is no automatic committee registration for candidates during the filing period. This is triggered only when they reach that threshold amount. So for right now, that's $1,100. As of August 3rd, it's going to be $500. There is no threshold exemption statement at all. Any candidate who spends less than the threshold amount does not have to register, and they do not have to file any reports. For political action committees, the criteria is contributions and expenditures of the threshold amount, right, being $1,100 or more. and their primary purpose is influencing elections. So that's the two criteria for PACs. And then if a candidate or a PAC meets the criteria to register, the committee has 10 days to file a statement of organization. Okay. So we'll go to the next piece, which is contribution limits. So it's important to know that contribution limits themselves, they did not increase, but they changed the definition of election cycle. And again, we've kind of talked about this before, but they actually have tightened it up even further, which I think is helpful for us. So what I included here is just the definition, but just as it pertains to city or towns. I kind of took out the rest of it as it relates to the state. So election cycle is the 2-year period beginning on the first day of the calendar quarter, after the calendar quarter of the city or town's scheduled runoff or general election, and then it ends on the last day of the calendar quarter in which the city or town holds its second or runoff or general election, however the city or town designates that particular election. So for the current election cycle, our individual limit is $6,350, like from an individual to a city or town candidate. So I tried to use this in this next example here. So let's say for this upcoming election, it's August 2018, November is the scheduled runoff. It kind of falls into that October to December 2018 calendar quarter. So the first day of the next calendar quarter is January 1 of 2019. So that's essentially going to be the beginning of the next election cycle. And then the last day of that election cycle, because the last day of that calendar quarter when the next scheduled runoff will be, is November of 2020. So the last day would be December 31st of 2020. So right now we are in sort of the January 1, 2017, beginning of that election cycle through December 31st of this year, 2018. That's our current election cycle, if your election is scheduled for August or November. And I also kind of wanted to give an example. So for the next election cycle, let's say it's January 1 through 2019, and it goes through again December 31st through 2020. So at that point, a city or town candidate can accept up to $6,450 from an individual, because we have those biennial increases. And so it's going to go up January 1, 2019 to $6,450 from $6,350. So at that point, in that sort of 2-year period, they collect $6,450 from an individual. And if they're in a 4-year term, they still have 2 more years until their next election. And so as of January 1, 2021 through December 31st of 2022, that's another 2-year period. And again, it goes up by $100. And so they can receive $6,550 from that same individual. So again, the contribution limits didn't increase in terms of kind of like that base amount, although they go up biennially. But because the election cycle is only a 2-year period, if you are a 4-year termed candidate, you essentially can get sort of double from the same individual, because you have 2 election cycles within your 4-year period. So let's talk a little bit about contribution limits in terms of what candidates can do. So for candidates, they can contribute monies to a person, which is defined in the statute to include a corporation, an LLC, a labor union, but they cannot contribute to another candidate. And we'll talk about surplus monies in a little bit because that's sort of an exception, but technically it's not, because one person isn't a candidate anymore. So it's kind of a good rule of thumb to remember that candidates cannot contribute to other candidates. So we also have transfer of candidates monies like to yourself. So let's say you have a city or town candidate, and maybe they kind of want to explore whether or not they want to run for another seat, maybe a county seat. And so you may transfer, a candidate can transfer unlimited contributions to themselves in a candidate, like a county candidate committee. But it's important to know that there's some restrictions on that if we move forward to other types of seats. So we do have that prohibition that city town candidates cannot directly transfer their own funds into a state or legislative committee. So they essentially have to park it 24 months in a county committee, and then they can move it to a state committee. This was one of our league resolutions this year. We did try, the city of Maricopa had worked very hard to try to get this repealed, because this was really only put in place a couple years ago when we had the campaign finance overhaul. But unfortunately, we were not successful. So this is still in place, that a city or town candidate cannot directly move their money to a state or legislative candidate committee. Like I said, they have to move it to a county committee for 24 months, and then they can move it up to a state or legislative committee. But there's no restriction sort of the other way. So a state candidate committee can move any of their funds to a county or to a city or town committee. Let me see if I have any questions here on this. Okay, so this actually has to do a question about sort of the previous section about the statement of organization. So does a potential candidate have to file a statement of org before they file their candidate paperwork if they collect the $1,100 before they file their paperwork? That's a good question. So yes, so if they essentially meet that threshold, like again, the election cycle for us started January 1 of 2017. If you are having an August-November election this year. So if they're out, and even though maybe they haven't officially qualified as a candidate on the ballot, if they are reaching that threshold, they're receiving contributions and they're expending money, for the purpose, obviously, of them to get on the ballot, then yes, they should file their statement of organization, even if they haven't filed yet. Typically, I think most of the time people are kind of doing it together, because they don't really start launching their campaigns until they actually are on the ballot, or at least close to filing. But that's a good question. The law requires that once they hit that threshold, that they do have to come in and file their statement of organization. So let's talk a little bit about excess contributions, which is kind of a new concept that was added in the law about 1.5 years ago. So an excess contribution is one that exceeds the contribution limit. Now, if you knowingly accept a contribution that exceeds the contribution limit, that is actually a violation. So this really is kind of dealing with like an unknowing situation, where maybe it was deposited before you could get, realize and get to the person and let them know that they'd given you too much. And so what the law now provides is that a candidate committee can go ahead and what's called reattribute that excess contribution if the following apply. So the excess contribution was from an individual to the contributor. So it can't be from like a party, or it can't be from another committee. It has to be from an individual. And then the individual contributor authorizes the candidate committee to reattribute that excess to another individual who's on that same bank account. So it has to be a joint account holder in the original instrument. And we'll kind of walk through an example here, just because it makes it, I think, a little bit easier to understand. So again, our contribution limit from an individual to a city or town candidate right now is $63.50. So let's say you have a spouse and he makes a $7,000 contribution to one of our city council candidates. And he uses a check that shows as both spouses, they're listed as joint account holders, but only one spouse signed the check. The contributing spouse had not made any previous contributions during the election cycle, so that's the first, and so far is $7,000. And again, the contribution limit is $63.50, so that is definitely over the contribution limit. So what the candidate committee then has to contact that person to let them know that they've exceeded the limit, and then inquire how to proceed. And that contributing spouse can essentially authorize the committee to reattribute that excess contribution to the other spouse. So essentially then the committee would document that it talked to that person, and that $63.50, which is the limit, applies to that first contributing spouse, and then the remaining $650 contribution will now be coming from the second spouse, and then they have $5,700 left to contribute if they wanted to do that. So that's essentially kind of how this works. I think it's a little odd just because it's in this whole scenario, you never actually talk to the person that you're reattributing it to or from, but this is the way that this is designed. And as you can kind of see, I've noted in certain places at the top where I'm referencing the Secretary of State's procedures manual. Right now, it's currently in a draft form because it's waiting approval by the Attorney General and the Governor's office. But this essentially, this example is from the manual. So this is the state's interpretation of how to use this excess monies and how to do the reattribution. So this is a new process that is available to our candidates. So I have another kind of just some quiz here, just kind of help us to make sure that we understand everything we've covered. So can a candidate transfer $750 of their own money to another candidate? So the answer is no, right? We can't, a candidate cannot transfer money to another candidate. And then what about, can a city candidate transfer $3,000 to a state committee? And so again, the answer here is no, not directly, right? They'd have to take their money, transfer it to a county committee for 2 years, and then they can move that money to a state committee. So what about, can a state candidate committee transfer monies to a city or a county committee? And the answer is yes, there's no restrictions. It can kind of flow down without any problem. And then can a candidate who receives an excess contribution, so over the contribution limit, can they refund the excess instead of reattributing it to the other spouse? And the answer is yes. So refunding is always an option. So even though the new law kind of created this whole new scheme about reattributing the monies, they can always just provide a refund. Let me see. So I have another question about 2 candidates who would like to campaign together. Would the threshold limitation be combined for both? So no, they each candidate is sort of independently. They have to keep track of their own contributions and their own expenses. So if they're, maybe doing some type of joint fundraising, I think there are some caveats to that. So I'll see if I can maybe find some information and send that out. But generally, even if they're campaigning together, everyone is sort of responsible for their own committee, for their own contributions and expenses. And so that's what they use to determine whether or not they're hitting that threshold amount. So they don't necessarily sort of combine both from both candidates to see if they reach that threshold. They should still be tracking their own individual contributions and expenses. But I will see if I can find, I believe there's some information about joint fundraising. And I believe that the Secretary's manual actually talks a little bit more about that as well. So I can send that out so you have that for reference. Okay. So the next piece of this has to do with the campaign finance report form, which I know is really not everyone's favorite form. This really is supposed to just be a temporary, form until we can have access to the state's campaign finance system. And I know that's been delayed, but this is hopefully maybe the only or last election cycle that we'll have to use the form. So what I did here is just kind of, I took a picture of it obviously, and then I kind of highlighted the box that we're going to be talking about, and then the next slides will kind of show it in a better form. So I've had some questions about what local only means on the reporting form. Because as you can see in the sort of highlighted box, this is the one that's the 2018 May pre-election and then the second quarter report, and it says local only in parentheses. It doesn't mean that all local jurisdictions have to use this particular form for the reporting period. It's only if you actually are having an election during that particular time. So it really only applies during your election year if you're actually having an election. And in this example, it would be that March and May election of this year. So if you're having an election next week, then you would want to be using this these boxes for the pre-election report if you're having candidates who are running or even committees who are running. So that's one question that I typically get. And then also I wanted to also mention that I know on the form itself, instead of like pre-election, post-election, the Secretary's office just seems to kind of refer to it as a quarter report. And I think in the manual we have it as a pre-election and a post-election, but that's just to kind of give an identification of that is, you're finishing out that post-election, but they're the same report. Let me see, I have a couple questions here. Let me see. Okay, one's about independent expenditures, and I think we'll actually get to that in a little bit. So I'll wait on that one. And then, we have another one about joint fundraising. So if people are campaigning together, can they have all the money go to one candidate and then only one has to do campaign finance forms? And can also one of the spouse of a candidate contribute to another candidate? So for the first one, so if you're campaigning together, I mean, if you're a candidate, then you really need to be tracking your own expenses. So I don't know about, it seems like the question is like maybe one person is sort of taking care of all the finances, but it looks like they're probably, if you're actually really campaigning together and you're campaigning for your own committee or for your own candidacy, you really should be tracking that independently and not really just have like relying on one candidate to do all that for you. And then also, can the spouse of a candidate contribute to another candidate? So yes, so I mean, everybody has the ability to give money, obviously, to any candidate that they want. So the prohibition on candidates giving money to candidates is really about your candidate committee monies being used to help other candidates. But obviously, you know, if your spouse wants to use personal money and donate to another candidate, that's perfectly fine. And then I will get back to this one about independent expenditures when we get to that point. Okay, so we've looked at sort of what the local only report is, but for most of you that are having the August-November election, you'll want to use the one that's highlighted here because again, it's just a regular quarter report. So you're not having to do the pre-election report for May. And then for the, I kind of highlighted this next sort of 4 boxes because this is really what we're going to be using for the August-November election. We're going to have that August pre-election report. Again, the post-election, which the SOS just calls the quarter report, that'll kind of finish up the August primary. And then we'll have your election report for November, and then again, the quarter report to finish out that cycle. Okay. So I just also wanted to highlight this on this, the Secretary's office included sort of this last box, which if you just have a committee that's terminating, they can check this one, which is essentially their last campaign finance report as they're terminating. All right, so for a campaign finance reporting schedule, so the easy one obviously is if you don't have an election, then it, you know, your political committees or political parties are just having to file strict quarter reports, no pre-elections or anything like that. So it's pretty easy. This is the schedule. This is in the manual as well. I also just wanted to mention that we did adjust our timelines to kind of conform to what the Secretary's office is now doing in terms of the reporting deadlines. As you recall, when the law was first changed a year and a half ago, they were pretty firm that they were not going to allow any filings to be sort of moved to the next business day. They just felt that because there was electronic filing that people could email or obviously through the state system, use the system all the way up through midnight, and there was really no reason to allow any type of additional days for someone to come in. So we have been, I think, pretty persistent in trying to ask for that accommodation because I think it's a little different at our local level, and we do have people that come into the office. And also this campaign finance reporting form is not the easiest to use. And so we've been really pleased that they were able to go ahead and they've kind of accommodated us and themselves as well. It actually applies to the state as well. This is not only in the procedures manual, but now also in their handbook. So they do allow for the filing period if it falls on a weekend or a legal holiday to be moved to the next business day. So I think that's just helpful because that's what the law was for a long time. And so I think that's what most of our candidates are familiar with. Now, if you feel strongly that you want to keep it onto the actual reporting day, then I would just, you know, suggest that you talk to your attorney about that so that you are consistent throughout the election cycle and kind of know how to answer those questions if candidates ask. So that was the easy one. So obviously, if you have an election, then we have the pre-election report, and that's due 10 days before the election, and that has to be complete through the first day of the calendar quarter through the 17th day before the election. And then you have your post-election report, or as the SOS says, just the quarter report, and that's due the 15th day after the calendar quarter, and then it's complete from the 16th day through the last day of the quarter. And for me, it's just always easier to see it in examples. But I also just wanted to mention, so it's very important that you remember that not all your candidates are filing at the same time, and this can be really confusing. But a candidate committee files their report only during the 4 calendar quarters comprising the 12 months before their actual election. And that's the actual runoff election. That's what you use to calculate. So if your scheduled runoff, let's say it's this year, November 6th of 2018, the 12-month sort of look back period extends back to November 6th, right? So that's 1 year before, 12 months. And then since that date falls within the 4th quarter, the October through December of 2017, the candidate's first campaign report was due January 15th of this year. And I think most of you already had that schedule and were following it. But it's just important that you kind of remember that it only applies to those candidates who are running in this election cycle, August, November of this year. So if you have candidates who are running in 2020, they should not be filing reports at this time. Let's see. So, and it is kind of strange, but you do essentially have candidates who are not filing reports for about 3 years between elections. So the timing of when the candidate committee was established sort of also determines when the reporting period begins. Essentially, you know, it's in the statute that, you know, the candidate always has to be tracking their contributions and expenditures, even if they haven't triggered that threshold yet, because they might. And so if they do, they're going to have to go back and report everything they've spent since the beginning. And so it's important that they know that maybe even though they're not having to file a statement right now or start reporting, if they hit that threshold, they're going to have to account for everything from when they first started. So that's just important to remind them. And then the first report that they make always has to include the entire election cycle to date. So if you have a candidate, let's say that, last year we had a big, effort to go ahead and terminate all the committees by June 30th. And so let's say you had that happen and that a committee was formed in August of last year. So during that first report that was due of January this year, they should have reported all the way back to August if that's when they actually started their campaign. So that's just a kind of, again, it's supposed to be cumulative and it's supposed to report everything. There really should be no gaps. So how do we calculate reporting deadlines for candidates? So this is essentially kind of the formula. You determine what your primary election date is, and then your scheduled runoff date. And then using your runoff, you identify that 12-month date, sort of before, 12 months before, and then figure out which quarter that lands in, and then that helps you determine sort of the due date for the first report. And I like to use examples because I just think this makes it easier. So let's say for this year, August 28th, right, is the primary. So your scheduled runoff is November 6th. So your 12 months prior, again, was November 6th of last year. That fell into that last quarter, and so the first report was January 15th of this year. And then I've kind of listed out the remaining reporting deadlines. So you have, April 16th, and that was covering January through March 31st. Your July 16th is your next report. That's, again, just a quarter report, April 1 through June 30th. And then you start getting into your pre- and post-election reports. And so you can kind of see the deadlines here. And essentially, it kind of covers the rest of the cycle. And I have a different example if for, let's say we do have a handful of charter cities that have their elections in March and May of next year. And so it's the same process. Their primary election date would be March 12th. Their runoff date would be May 21st. And then 12 months prior would be May 21st of this year, so just in a couple weeks. And so we're in the April through June quarter right now. And so their first report is actually going to be due July 16th for their candidates for next year. And then this is kind of the rest of the election cycle for them. So what if your council maybe calls a special election? Let's say you have a recall or you have to fill a vacancy. Essentially, you follow the same process, but the schedule might be abbreviated. So let's say I'm going to use Phoenix as an example because I think this might be happening here. So let's say they call the election May 30th. So that's, end of the month, they have to have a special election. They're not going to make the August election date, so it's going to be in November. So that's the primary date that they identified, November 6th. So their runoff is actually going to be March 12th of next year. So 12 months before that is March 12th of this year. And then that was in that January through March quarter. And so the first report technically would have been due April 16th, but of course, you can't really have a report due if you haven't called the election yet. So what will happen is just they'll follow the next report date. And so that'll be July 16th of 2018. And so that's when the first report will be due, and it'll essentially just cover the beginning of the election cycle, which in this case would be when the election was called, to June 30th, 2018. So that's just an example if you have a special election. So we've had some questions kind of about how all these reporting requirements work. And so we had addressed a lot of these with the Secretary's office, and so they did put them in the procedures manual, which I think helps to kind of give us guidance. So the first one is which elections trigger pre-election reports. And it's important to know that it's really only elections in your jurisdiction. And this example here is actually from the procedures manual. And so essentially, if Pima County conducts an election on behalf of the city of Tucson, so they're running their election for them, any committees registered with the city of Tucson have to file because it's their election. So they'll have to file a pre-election report, but Pima County committees don't have to, so essentially all the county candidates wouldn't have to file any type of report because it's not their election cycle. What if your city or town calls an election to fill a vacancy or hold a recall? Sort of which candidates file reports? So not all, right? Again, the statute only requires candidates to file reports within 12 months of their own election. So for example, let's say some of you are having a special election, maybe it's a recall or something like that that's happening next week, right? May 15th. And your regular election is actually August, November of this year. So the candidates that would have to file reports are those that are running in the special election on May 15th, because they're candidates in that race. And then your candidates who are running in the regularly scheduled election this fall, they also would have to file those pre-election reports because they're within their 12 months of their own election cycle. They started reporting back in January, and so they're within that 12 months. But candidates who are running, let's say in August, November 2020, they are not within the 12-month period for reporting, and so they would not have to report like any pre-election reports for this, like for a special election. Okay, let's see. So what if you don't have a runoff election? So what reports are filed? So this is important. Again, this is from the procedures manual. They've kind of given us some guidance. So a pre-election report is not required if you don't ever have the election. So if, again, you have, your August primary and there's all the candidates are elected at that election and you don't need your runoff, then there's not going to be a pre-election report required for any of them. Although they do have to still file their ending quarterly report that would cover October 1 through December 31st. Because again, we never want to have any gaps in reporting, but they wouldn't have to worry about that pre-election report. So we've kind of had some questions though about, well, what happens if one candidate moves forward and others don't? Who has to report? So what the Secretary's office has provided is that if at least one candidate office moves on to the runoff, then all committees that are registered in that jurisdiction have to do the pre-election report. So this is one of the examples they gave. If you have 3 council member seats open, and then you also have your mayor's race, and let's say all 3 council seats are filled at the August election, but the mayoral race is going to go to a runoff. Well, then all candidates, even those council members who are already elected, they're going to still have to file that pre-election report. And they may not even really have much activity, but maybe they're winding down. It doesn't matter. They're going to have to file that pre-election report. If all 3 council members and the mayoral race are filled and there's no candidates going to the runoff, then the candidates just filed the quarterly, that post-election, not the post-election, just that quarterly report, the October 1st to December 31st. So they won't have to file that sort of smaller pre-election report ahead of time. So again, this is the guideline from the Secretary's manual. talk to your attorney about it if you have sort of additional questions about how this works, because frankly, I know that it's confusing, and I know it's really hard for sort of the candidates to understand this new process, as well as for us to understand this new process and to determine, why some people are having to report and others are not. So let me see. I also want to check if there's any questions. So do candidates have to file reports in the regular election cycle if I have not called the election? So essentially, if your election period is August, November right now, let's say this year, right? So they should be filing reports. So January 15th should have been the first report, because again, it's within that 12-month period. And so they should have been providing everything that they've spent, up beginning of the election cycle up through December 31st. That should have been their first report that was due January 15th. And then their April report should have covered January through March, anything that they might have received or spent at that point. So they should already be filing if they're in their regular election cycle. It doesn't matter whether or not you've technically called the election or not. Sort of, I think campaign finance is kind of on a separate track. And so for our purposes, yes, they should have already been reporting. Okay. Let's go. So it's just important to know that candidates file at different times depending on their term and when they're elected. So a city council candidate who was elected in August 2016, right, 2 years ago, and it's a 4-year term, they don't report again until January 15th of 2020. And that first report covers the beginning of the election cycle through December 31st of 2019. And then thereafter, we sort of follow the same pattern of, sort of 2 quarterly reports, and then you start hitting your pre-election, post-election reports. Also, let's say you have a city candidate who was elected this year in August of 2018. They filed their last report January 15th of 2019, because that'll cover the rest of this election cycle, the end of this year. They don't need to report again until January 15th of 2022. And again, that'll be the first report, and it will cover everything through December 31st of 2021. So again, it is about 3 years where they go where they're not actually reporting. And I know that seems really strange. And it's also a little bit more cumbersome for you to sort of keep track of which candidates file and which candidates don't file. Let's see, I have a question. If all candidates are elected in the primary, but you have a question on the general election, or our candidate campaign finance reports due. So I had kind of looked into this as well, because the manual didn't necessarily specify, like if you happen to have a proposition or a question or a measure, do your candidates actually have to file? But when I looked back on the guidance that they gave, they really seem to be emphasizing candidates moving forward to the runoff and or offices, that still need to be elected. And so they didn't seem to reference anything about measures or propositions or questions. So this is one where I would suggest you need to talk to your attorney. But it looks like kind of what the secretary is essentially trying to say is it's really about only if candidates are moving forward into the runoff, that then you would always have your candidates go ahead and report that pre-election report. So you may not have to do it if it's just, no candidates go to the runoff, but maybe you are holding a general election, again, for a question or a proposition. I think this is a determination of whether or not, what you feel comfortable with. Technically, the candidates aren't really being involved in that race, so I don't know. And you will still get their report. It's just they won't have to do a pre-election report, right? So you're still going to get a report of all their activity. It's just going to be sort of that final quarterly report. So for this one, unfortunately, they didn't specify in the procedures manual. So you might want to talk to your attorney about what you, again, feel comfortable with. And really, whatever you decide, I would just say just be consistent with it. I have another question about what about a candidate committee where the candidate was not elected? Does the reporting change? No, they're in their election cycle, and so unless they terminate, they're still responsible for those reports in their election cycle. And actually, we'll kind of talk a little bit more about a couple scenarios here. So what if a council member's term expires, but the committee remains open? When does the member file? So a candidate has to file their reports through the end of the term as if they were seeking re-election. And again, this is from the procedures manual. So if a candidate keeps the committee open after his or her term of office has expired and they're not seeking election to any other office, they're still responsible because their committee is open. They're still responsible for filing those reports. And so you sort of anticipate it's just based on the office that they were holding and when they would have sought a re-election in the future. So I kind of have an example here. So let's say candidate's term expires on the city council in 2018. So it's this year, and they're not seeking re-election. So let's say it's May 31st. They haven't filed their nomination paperwork. They're not going to seek office, but they don't close their committee. So a report will, they will have to file for this year, and then they'll have to file again January 2022. So they're going to do all of their reports for this year, even though they're not actually running for office. And then they're going to go ahead and do it again if they're still open, if the committee's still open, January 2022, according to that whole reporting cycle. So I think part of this is obviously to get them to close their committee if they're truly not going to be running for office. But it's something, again, kind of cumbersome that you have to sort of keep track of for them. Okay, so we have another question. What if there is a recall in November, but all the candidates were all elected outright in August? Do they have to file the pre-election report? So I guess if they didn't run, so essentially if you have all of your candidates who have, and they've all been elected already at the August election, and so you're not having essentially a runoff or any type of candidates in the runoff, then no, they would not have to file a pre-election report for November. They would just have to file that final quarter report, which would cover October 1 through December 31st. Let me see. And you're right, yes, in the previous slide, it had something about the majority was 51%. And I meant to take that out because actually that I just copy and pasted from the procedures manual, which the state used. And so obviously we use a different calculation when we do majority votes cast. So don't worry so much about that. Essentially the point of the slide was really if you're moving to the runoff or not. So I wouldn't worry about the 51% because that's again, I'll kind of let the Secretary's office know that that's not how we calculate who moves forward. Okay, so this is about independent expenditures. So I just kind of included this just so that you're aware of it. Really the kind of burden is really on the committees or the entities that are actually making these disbursements to know, how to report and when they need to report. So their reports have to itemize all disbursements in excess of $250 during the reporting period, including independent expenditures. And all of this is contained on those reporting forms. And then an entity that makes independent expenditures or ballot measure expenditures in excess of $1,000 during the reporting period, of course, they do have to file their expenditure report. And again, it's contained within that same packet of campaign finance reports. They just don't have to file all the rest of those forms. They just kind of have to dig through and find the one that applies to them, and then that's what they submit. So let me go back because I know there was an independent expenditure question. Okay, so do candidates have to declare the value of the expenditure as an expense and use that amount in determining if they are required to file a statement of org and campaign finance reports? So this was in reference to independent expenditures. So independent expenditures are really supposed to be independent of candidates. So you're not supposed to have any. So really it's not anything that the candidate would have to report. Again, it's the entity, we've had some associations and maybe some like 501As or 501C, going out there and maybe doing some advertising, either supporting or opposing candidates, but that's all independent of the candidate. As long as the candidate isn't coordinating or working with them, it's truly independent, then it's on the independent expenditure it themselves, that they're the ones who have to sort of track that and report it. The candidates don't have to report what's been done sort of on their behalf. Again, as long as there's no coordination. If there is coordination, then it's not really an independent expenditure. So that kind of leads into a different discussion. I also wanted to include just briefly about recall elections because I know some of you are experiencing some of these. So for a recall, you know, a lot of the same information applies and reporting and all of that, but it's just kind of important to know that there's some caveats here in the statute. So a candidate committee can be used for recall, but they have to sort of create separate bank accounts and sort of track it separately. Contributions for a recall cannot be used to influence another election, so you can't sort of collect all your money for a recall and then use it for maybe your regular election. The election cycle definition has, you know, a recall contained in there of sort of when the actual recall period starts. You know, when does the election cycle start for a recall? And that's either through either the recall election itself, or when maybe the person who is subject to recall decides to resign and that resignation is accepted, or when the filing officer gives notice that the number of signatures is insufficient. So all of those would sort of end the election cycle. The important thing also to know is that the law a couple years ago repealed the requirement that the statement of organization was required before they start circulating recall petitions. It used to say that signatures were void if you hadn't come in and filed your statement of org. That's been repealed. So essentially it kind of, you know, infers that you can go ahead and start circulating. And again, you don't have to form a committee until you actually hit the threshold requirements. So for termination, I'm not going to talk too much about this. I think it's pretty straightforward, you know, committee termination itself. The one thing that I did want to mention, though, was the law allows essentially the clerks to reject the termination statement if for some reason requirements aren't satisfied. For me, this I kind of feel like puts you in some dangerous territory, and so I just want to make sure that, you know, you maybe talk to your attorney ahead of time so that you're really clear on what factors that you can use to actually reject a termination statement. Because if you reject their statement and they're still essentially on the hook for filing all their reports. And then if they don't file the reports, I just think it could get really complicated. And so you just want to be clear exactly for what reasons you can reject a termination statement. And just feel comfortable with that before maybe the end of the election cycle, before they come in and start terminating. I had mentioned earlier about surplus monies. So candidates can't give candidates money, but essentially if you're no longer a candidate and you're closing out your committee, then you can give your surplus monies to another candidate, but you have to meet all of these requirements. So essentially the nomination paper filing deadline has passed. So let's say, the deadline is November 30th of this year, or I'm sorry, November 30th, May 30th. So let's say it's May 31st. So the filing period has passed and you haven't filed your nomination papers, and so you're not running for re-election. So that essentially candidate committee can go ahead and make a contribution to another candidate, essentially giving their surplus monies to another candidate. They just have to stay within the contribution limits. Just touch on briefly about failure to file for enforcement. So if obviously a committee fails to file the reports, there's a sort of procedure in place about giving the committee written notice within 5 days after the deadline, letting them know kind of what the penalties are, what's going to happen if they don't come and file their reports. And essentially, after 30 days, if the committee still hasn't filed, the clerk can go ahead and refer the matter to the city or town attorney. And really, there's no additional investigation or discovery that's required, which means you don't have to get a response from them or wait for more information or anything like that. This is pretty straightforward. You can just, after a certain period of time, you can send it over to your attorney for enforcement. For if you have a political action committee that fails to file 3 consecutive reports, then you can go ahead and issue that notice of temporary suspension. And then if they don't comply at a certain point, then you can go ahead and permanently suspend them. But this option seems to only be available for political action committees and political parties, not candidate committees. I'm not quite sure why. The only thing I can think of is essentially if they're going to come file nomination paperwork, they do have to attest that they're not behind or they haven't, there's no campaign finance that they owe over $1,000. And so I guess maybe that's why they think it's not necessary to suspend their committees. So just generally for other types of complaints, the thing I want to highlight here, of course, is that filing officers cannot initiate complaints. It has to come from a third party. But there's a list here that's from the procedures manual that kind of mentions all the reasons maybe why you could, that someone might file a complaint. And then if there's any type of conflict of interest, or if you anticipate there might be a conflict of interest, you might want to talk to your attorney about, maybe what other filing officer you can use in the state. Maybe you guys can kind of share if you have a conflict, so you can refer that out to another clerk. If there's a referral that you can't take for some reason. So the complaint process, I took this from the Secretary's manual, and again, this is they have some best practices about when a complaint is filed. Obviously, you do want to give an opportunity for people to respond to the complaint before you decide on whether or not there's reasonable cause. But they've kind of put in here again, best practices. If you want to assign a number, a complaint number, confirm in writing to the complainant that you've received their complaint, let them know that they're entitled to respond, the person who's subject to the complaint. They, I think, are going to allow a reply brief, but I don't think in the past that we've done that. So I would just, determine whether or not that's something you want to do. And then obviously let them know what your decision is. And then if you find reasonable cause, then you need to refer to your city or town attorney. And then I just also wanted to highlight here, because this is this has been emphasized a lot at the state level. During sort of your investigative phase, you cannot require a person to register as a committee, and you can't audit them or subpoena them. Basically, it's really voluntary. You're asking them to respond to this complaint, but it's really up to them how much information they want to give you. Hopefully it's enough so that way you can dismiss it, but you cannot compel them. When it's referred to an attorney, essentially they'll conduct the investigation, they'll do the notice of violation. The one thing I wanted to highlight here was keeping any non-public information gathered by the attorney confidential. So I don't know what non-public information is, and it hasn't been defined. We have asked for a definition, but we haven't really gotten a response. So from our perspective, I think that most of the information you're going to receive is going to be public records. So I think that's just kind of what you need to default. It's a public record, and if you believe that there's some information that's private or it's confidential or needs to be kept confidential because of sort of best interests of the state type of analysis, then obviously you can go down that course of action. But otherwise, I don't know what non-public is. I think most of the information you're going to get, so the complaint itself, so the actual response to the complaint, your reasonable cause determination, all of that's public record. So I don't believe that that's confidential. For enforcement, this just kind of walks through the steps. I won't go through too much of this, but this is essentially just kind of the notice of violation process and the ability for the party to appeal. And that you really can't sort of require any reports or anything until really they've kind of been able to go through that entire appeal process. Okay. So the last part here is just having to do with the campaign finance system. Just to give you an update. So I know we've heard varying time frames, and the system still is not available for us. I believe it should be available for the state and legislative candidates now or approximately here soon for this election cycle, but they are still working on it for the local jurisdictions. But the good news is that House Bill 2078, in addition to lowering the threshold for our candidates, it also removed the requirement that local jurisdictions would have to pay to use the Secretary of State system. And so essentially, once the system is up and running, we'll be able to opt in for free. So hopefully, I would think next year we can start maybe doing some testing so that we can start getting this going. When we do get closer to a launch date for cities and towns, I've already talked a little bit with the Secretary's office about preparing a model intergovernmental agreement for your attorneys so that they can go ahead and use that to kind of work with the Secretary's system if your city or town decides that they want to opt in. And then, of course, we'll do some more like additional trainings with AMCA as, kind of on the admin side of how do you actually access the system, because I believe you have to create the election. And then from there, everything's kind of automated, sort of populates. And so we'll kind of get some sort of behind the scenes training of what that means for you. So I think I've gotten all the questions, but if you have any other questions that come up, please feel free to email me. My email address is there, or you can give me a call. And I know that this is really complicated because this has been a lot of changes to campaign finance law, and this is sort of, I think 82 of our cities are on the August, November, even numbered year cycle. So for most of you, I think this is going to be your first time having to use this law with, at this time. And so I know it's a little bit confusing. And yes, someone said if I could send the presentation out to the group, I can absolutely do that. So that's not a problem. Let me see if there's any other questions before I stop here. Okay, nope, I think that's it. So thank you all for kind of tuning in. This actually also will be on the website, our website, probably by Monday. So if you have any other people in your office that you kind of want them to get a refresher, or if you want to go back through it again, you'd be more than welcome. We will have it posted probably on Monday. So thank you, everyone. Appreciate it.